Welcome to this Africa Arena digital panel. My name is Mudiwa Gavaza. I am a business writer for the Business Day and Financial Mail here in South Africa, part of Business Live and the Arena Holdings family. And today we're going to be talking, around reinventing the future of venture investment in Africa, how the world has changed. What do we do, and what do we do, and how do we go forward from that point of view? So to go ahead, we're going to be talking just around the next, maybe half hour or so with an esteemed panel of some experts and people that are actually on the ground and in business. And to just start things off, I'm gonna let some of our panelists just introduce themselves, just so that we get an idea of the type of experts and voices that we have in our midst. To just start things off, I'm gonna let Lexi just introduce herself.
Thank you so much. Great to be here. Joining you guys from the US, unfortunately, not on the continent at the moment, but trying to get back. My name is Lexi. I've been out in Nigeria for about 8 years now. Initially began running a venture firm called Singularity Investments, which was just backed by a family office, investing in early stage tech companies. Some of our investments include Paystack, Flutterwave, Migo, Smile ID, M-Pharma. So some of the really early success stories, I think, in West Africa. Late last year, we brought all of that portfolio under a new branding of a platform, but very similar sort of investment thesis at Acuity Venture Partners. Heavily focused right now on Nigeria and Ghana, but certainly looking at the rest of the continent as well.
And then Tommy.
Hi, my name's Tommy Davis. I'm an African business angel, and I am a co-founder of the Lagos Angel Network, which actually looks at early stage startups in the Lagos area. But I also preside over the Africa Business Angel Network, which has about 50 networks like the Lagos Angel Network across 33 countries on the continent. But my day job, actually, I have one now, is as the Chief Investment Officer for Green Tech Capital Partners out of Luxembourg out of Germany, Frankfurt. My apologies. Yeah.
No, thank you so much for that. And then we're also joined by the team from Digital Africa.
Oh, hi, everybody. So my name is Stéphanie Loïs Grain. I'm the CEO of the Digital Africa Initiative, which was launched in 2018 by the French President Macron, with a mission to equip African tech entrepreneurs with capabilities to design and scale up groundbreaking innovation for the real economy, which means that we have two kind of activities. One, financial activities run by DFIs such as AFD and Proparco, and the non-financial activity that we run with a whole ecosystem of partners. We have recently increased our financial commitment to 130 million euros, split across different kind of funds, early stage fundings, VC funds for more co-investment and from Series B to Series C, and finally a bridge fund that we are just launching today.
So as you can see, we are joined by a lot of people that are holding purse strings and making the investments. But as part of the actual business community looking for funding, we are joined by Number Boost, which is a startup. Alex.
Yeah, hi, Mudiwa and everyone. I'm Alex Conway from Cape Town. I'm the founder of Number Boost, a startup that builds custom artificial intelligence solutions focused on computer vision. We've won startup awards from Mercedes-Benz, NTT Japan, Lloyd's Register London, and MultiChoice. I'm also the co-founder of Unite.community, which is a tool that makes it easy to automatically distribute Ethereum tokens to reward social media engagement, a blockchain project. We recently won the Global Ethereum Hackathon, or won a bunch of awards at the Global Ethereum Hackathon last week. And yeah, I'm very excited to be here.
Now that we have the introductions out of the way, I think we can actually start the discussion and actually get into the meat and potatoes of what we have to talk about, which is, venture capital on the continent. And I think, I'll just start with Tommy on this one, just talking about the type of business models that are now actually garnering and attracting the most attention from venture funders, because certain attitudes have likely changed during the last half year or so. So what are you seeing on your front?
Well, there are two fundamental themes that I'm seeing underpin. If you look at those recently funded, Maxim Bayan, who works with other green tech, tracks all the startups that get funding over $1 million. And he says now, once every other day, there's a startup in Africa that's getting $1 million in funding. If you look at that set, I'm not talking of everything, but if we just focus specifically on those sets and you look at those getting funding, we're seeing a reaction to COVID in that it's the low touch models. Those that are digital in nature are starting to see an increase. That's why there's no gainsaying on the Stripe acquisition of Paystack. You see it's digital, fintech. Same thing is starting to bubble up around food in agri-tech, where we're starting to see the introduction of technologies that are low touch to consumer, but high value. When we add that to what I call the death of distance. So historically, Lexi would have had to fly into Lagos to do DD on something she's found. Now we jump on Zoom, just like we're doing now. And because we've got people local, that synergy is starting to evolve. So it's the models that take advantage of these emerging trends that we're seeing, in my opinion, active funding for.
It's actually quite interesting, hearing you talking about some of the low touch and particularly, fintech businesses, because those were, quite popular over the last couple of years, especially, on this continent. So I'm gonna, maybe jump to Lexi here to maybe get your take on the same thing. Do you, have you seen, a drift away, from possibly these fintech companies and perhaps other things, health tech, etc.?
So I think we saw a huge wave of fintech investment going into particularly payments companies. And I think you're not really seeing fintech slow down per se, but there's a second evolution coming that's enabling all of the existing fintech players to improve their own product and allowing digital commerce to really reach the customers. Platforms like open banking, sort of platforms, which are really, I think in South Africa, Nigeria, and Ghana are really opening up the market quite a bit now, as well as other identity platforms that are taking up a lot of growth at the moment and allowing other fintech companies to really access and onboard a larger consumer base. So I wouldn't say fintech generally is slowing down, but I think you're seeing a shift to another evolution of deeper sort of platforms and really enriching the whole financial services experience. I think another very attractive space right now is really on both logistics and inventory management. There's a lot of companies now that are really tackling hard problems such as cross-border clearing, even overlapping with the fintech side, other cross-border transactions like chipper cash, but there's some other models in other markets that are also gaining a lot of speed. And inventory management, not just for large enterprises, but also for smaller SMEs. And I think you saw, you know, a lot of those companies such as Sokowatch come out in other markets, but now you're seeing it a lot more in both Francophone Africa, Francophone West Africa, and some of the bigger markets like Nigeria.
You
Yeah,
know,
sorry, Mudiwa,
sorry,
go ahead.
yes, Alex.
I'll just add that from my perspective as a person building things, one of the most interesting new themes that I've seen in the last few months is projects not doing an ICO. I mean, you may have heard of initial coin offerings, which were very hype in 2017, and Filecoin, for example, raised $150 million in their initial coin offering. And then the SEC clamped down on a lot of those offerings as unregistered securities offerings. So there's been an interesting trend recently with projects in the blockchain space not doing initial coin offerings, but just distributing tokens to people who have used their projects. So Uniswap is a decentralized exchange. So Coinbase is the biggest centralized exchange in the United States, and Uniswap, which is just a smart contract running on Ethereum, no one can take it down, not even the founder, recently overtook Coinbase in daily traded volume. And Uniswap did a sort of stimulus package and airdropped $1,200 worth of tokens to everyone that's ever used the platform. And it now has a $382 million market cap. Another interesting project is Yearn Finance, which is essentially an asset management protocol running on Ethereum. And it was actually started by a guy in Cape Town named Andre Cronier. And it's got a $230 million market cap. And they didn't sell these tokens, they gave them away, but they trade on secondary markets and ended up being worth way more than where they'd have raised money through old school VCs.
You know, Stephanie, Lois, your take, you know, perhaps maybe, you know, answering the first questions and maybe jumping off a little bit on what Alex has just said.
Yeah, I mean, I really, I didn't say anything because I think that all my co-panelists did pretty much what I think and reflecting on what is in my mind. So I think, you know, it's very clear that in reaction to COVID, the area that were, you know, that the no-touch business model kind of is clearly, you know, gaining a lot of traction and attention. And all the business models that were digital by nature, as Tommy said, are clearly driving, I think, now the VC dynamics in general. And that means that, I mean, we at Digital Africa tend to say that we look at how technology can be used for a real economy. So meaning that how do we look at, you know, fintech application for other sectors, such as, you know, agriculture more specifically, or education, for example. I think so. What Lexi said also about open banking clearly is something, I would say, one of the major area to unlock, and also, so what Alex just said also regarding blockchain. I mean, I'm quite curious about the blockchain situation. To be honest, I haven't looked so much recently at the blockchain perspective across the continent. I appreciate this idea that, you know, ICOs are not maybe not so much are more connected to what I would call a real economy and perspective over markets. So on my side, I mean, it's really very much about how do we also adapt to understanding how tech business models in Africa must also operate under different challenges rather than, you know, Europe or US or other parts of the world. I would even say Asia, because a lot of the international investors and VCs coming from abroad and getting in Africa sometimes have a hard time to understand that scaling up a tech product across multiple countries with a lot of challenges can require different hype of both financial product and valuation. So yeah, that would be kind of my 2 cents on that question.
I think, as a follow-up to that, how have you seen the landscape changing? And more specifically, do you see more appetite at the moment for investing in those startups in Africa at the moment? I think we recently saw, Stripe investing 200 million in Paystack. And as good as that is that really indicative of an environment where investors, want to invest in Africa? Or was that sort of something that had been bubbling under for some time and they decided this is, what I guess what I'm trying to ask is that a once off? Are people really interested in African business, or have investors sort of taken a risk mitigated approach to Africa?
Maybe if I could jump in to start. I mean, it's two separate things. Are enterprise businesses interested in coming into Africa and acquiring tech startups to do that? And I think that the Stripe acquisition of Paystack is a huge example of that just starting. We've been talking for a long time, calling on where are the exits. And this year we saw a whole bunch of exits, both from international and on the continent players. Nearly, matching or exceeding actually the investment dollars going into tech startups. So I think that success is not only going to really attract more local funders, which I think is very key to helping startups grow, but certainly international funders that are both strategic and venture capital partners. And if you're just looking at the market in terms of a COVID lens, the continent as a whole, excluding a couple markets like South Africa, has generally withstood a lot of the same sort of crisis wave or volatility that a lot of the world has faced. And you're seeing a lot of our companies whose growth numbers are really, reaching kind of that J-curve trajectory, and it really boils down to that traction, and that's what's going to attract the investment dollars. And with 2020 certainly exceeding 2019 on investment dollars coming into the market, despite a global economic slowdown and concerns over COVID and lower risk tolerance in general, I think that's incredibly promising.
I think I'll bring in Alex at this point because he is a founder, to perhaps get a sense. I'm not sure whether you guys are in the process of a funding round or looking for financing at the time, but from your experience, how are investment dollars really flowing in this direction?
Yeah, so I just got off a call with investors right before this call, and we've been speaking to the top tier VCs in the crypto space over the last few days, and there's a lot of appetite. I think crypto is not necessarily representative of other verticals. We've had some conversations in the recent history, like the last few months, on our artificial intelligence number boost business, and there seems to be some appetite there, but the sentiment I feel is that investors are sitting on their hands and waiting to see how COVID plays out. So yeah, I don't know. If I was raising money for my non-crypto business, I think I'd probably have a bit of a hard time. Whereas the crypto world, PayPal announced that they're supporting crypto. They have 250 million users. Bitcoin's up 40% in the last few weeks. Like, crypto's seems like doesn't know that COVID's happening, or maybe it's anti-fragile to COVID.
Tommy, it sounds like in some parts of the market, like the crypto market, they don't really know that COVID is happening, like what we're hearing from Alex. But from your point of view, just talking to maybe the entrepreneurs on the actual ground, how are they? Because I saw a startling statistic recently where it said that about 60 to 70% of non-venture backed startups on the continent actually shut down, during the 6 months of, of the last lockdown, and that's just something that I read. I don't know whether on the ground that's something that you are actually seeing. Are people looking for that funding, and are people going to the traditional hotspots like Nigeria, like East Africa, etc.?
Well, the honest answer is yes, because money chases markets. That's just the reality of it. And Africa, as Stefan and Louise was saying, is 54 different jurisdictions. So the more people you can deal with in a singular jurisdiction, the easier it is for you to transact business. Those are fundamentals. So that Egypt at 100 million, Nigeria at 200 million, Kenya at about 60 million, and South Africa trending over that will be destinations is without doubt. But what we are also seeing with other efforts is this, what's the word? We call it expanding to new networks, but it's more an aggregation, a regional, sorry, that's it. This regional footprint approach that we're starting to see some startups take is also, getting some legs. So you've heard somebody talk about Francophone, probably centered around Cote d'Ivoire, Senegal, but guess what? I'm also going to do Morocco. And all of a sudden, by the time you're talking Tunisia, you've got a significant market, single language. So we're starting to see these kind of plays. And that's why, like Lexi was saying, we're 25% up on last year in inbound at the top above $100 million investment. So I think we're well over 800 million now. I know for sure we passed the $500 million inbound investment mark. So that's where it's going, is because people are discovering, even with the low touch systems, that you can do these markets in interesting ways. It sounds like it'd be crazy, but guess what? Kenya, Nigeria, East, West, look at what people like Cellulant are doing. So it's interesting from that perspective, that what we're going to be seeing more of because of this digital imprint is that death of distance, but the commonalities, that is primary language, will still prevail.
Stefano, I like what Tommy is talking about the 800 million or so inbound investment, because I think, from, just some of the research that I know, that means that Africa is on track to actually exceed the 1 or 1.2 billion that was invested back in 2019. But that's still, a drop in the ocean compared to the numbers that is being seen in North America. I think it's less than 2% of what is being invested venture capital wise from that end. So, from your point of view, with all of that as a backdrop, at this moment, are you interested in yourself and your peers? Are you interested in businesses that are at the early stage, or at least businesses that look like, okay, 100,000, 1 million users, or already have built traction? How important is the traction discussion to you right now?
Oof, that's a very good question, and I'm sorry to say that I cannot answer it with one single answer point, because it's clearly what we are reflecting on right now, and especially since we are working with Proparco on designing a 40 million euros early stage fund. And I think what's interesting and what matters for Digital Africa is that we need to have a sort of like overall approach of investment from early stage to, let's say, pre-growth. And I think we need both. We need to look at what already has traction and can sort of leverage or impulse the market, and also play a sort of like role model for all these early stage entrepreneurs. But we also need to look at different ways of, and I know this is also something green tech has excelled in terms of like bringing a fresh fresh vision on venture building, for example, and how do you really work from an early stage perspective with that early growth mindset, I would say. So I'd like to get back also to answer that to the regional aspect of, market approach of VC venture capital in Africa, because for me it is very much the key to unlock market potential and have some sort of like regional champions. And I think those regional champions will drive communities of early stage entrepreneurs. So I think, no matter what we think of the current conversation about the e-commerce protocol regarding the free trade continental agreement, which is something that is supposed to be unlocking 1.2 billion consumers, so market potential for the next years. I think, this regional approach should be sustained from both innovation policy point of view, but also from just a venture building point of view. So I don't know if that gives you a clear answer to your question, but I think we need to really, yes, define both regional approach and sectorial also approach tied to this regional approach.
One of the things that's quite interesting in this debate when it comes to early stage versus, pre-growth traction, all of these, different stages that businesses go through is the type of flexibility that you see for African startups, because recently we saw Nicola being able to list as a pre-revenue company, right? So, Lexi, do you think that African startups have that flexibility where you can do that on the promise of revenue one day, be able to go and say, I want to raise, billions of dollars, or is there just not that headroom in this part of the world?
So I think that there is less in this part of the world than more developed markets like the US and Europe. I do think that investors want to see early revenue numbers, even if that's 3 to 6 months, and we certainly look at that. But I do think that you're also seeing some incredible teams with their technology already built and partnerships signed and maybe licenses secured that maybe are not quite at the revenue growth stage yet, that are still attracting investment and competitively, early stage rounds that are really difficult to get into. But it's still such a wide open landscape in so many subsectors of the market that I think if you have that right match of team, business model, and partnerships to make sure that you can acquire the customers and get the revenue growth, even if you haven't quite realized that revenue traction, I think you can definitely secure venture capital in most of Africa's markets.
I'm very keen to get, everyone's, because we've heard from Stefano, Lois, and Lexi now. So I'll just give the floor first to Alex and then to Tommy, just to get your sense on this, this word traction.
When you see it is my view on traction. Like, if you're wondering whether you have product market fit, you do not have product market fit. Like, yeah, you're getting notifications left, right, and center, and wake up at 5 a.m. because the servers are melting. And yeah, traction is elusive, but not hard to recognize. To come back to the earlier points, I would just say, like, from my perspective, there needs to be a lot more really early stage support of startups, especially in Africa. Like, why is there no Y Combinator of Africa? Why is it so hard to raise, YC gives 150K for 7%. Like, most startups in Africa would be able to get off really well with like 20K US. But if you look at the accelerators, at least ones I've looked at in South Africa, they take like 15% for a tenth of YC's initial check and provide 0 or close to 0 value. I think there needs to be a lot more like help for early stage startups and that includes advice and introductions and just helping them find their feet to get that traction.
Tommy?
Well, the good news, Alex, is there's an organization we have called AfriLabs. I don't know if you've ever heard of them.
Yeah, I've heard of them.
Okay, now what AfriLabs is doing, courtesy of the French Development Bank and others, is actually building out curriculum that is going to empower their member hubs. They've got about 240, 250 hubs across the continent. And what they're doing is identifying individuals that can actually be part of that startup build out process, not dissimilar to what Startup Bootcamp has been able to do out of South Africa, but taking it to the next level, like people like Mest have been able to do. So those are sort of, you look at CC Hub, for example, and what they've done with iHub, and you start to get what I'm talking about is these are becoming the default destinations for startups like yourself as you build out your base infrastructure in the early stages. What we're trying to do also is now couple that with angel investors working with the hubs to provide the mentoring and the advisory alongside. So giving them deal flow for the upside of their early investment of time. So those are the kind of things we're hoping to put in place, working with Digital Africa and others as we go along. I trust that helps.
Maybe I could jump in here really quick and just kind of be a little bit of a naysayer. And again, this is just from what I'm seeing in my market. The companies that are, the market has matured incredibly in the past 5 years. And every single year I'm seeing incredibly much more mature founders come to market that have worked at some of the successful tech companies, either on the continent or elsewhere globally. And they already have the startup experience. They've kind of been through it, maybe not as a founder directly themselves, but they've been through it from day one at other companies. So I think, as much as the incubators have a role to play, I think that investors should see their role as being a little bit deeper, rather than, this is how you build a venture, this is how you measure your data, this is how you pitch to investors, and this is how you raise capital. It needs to be a lot deeper than that. And we're trying to take a secondary approach, understanding that, as a small firm, we can't do everything. So we've put together a very strong data science team, PhD of data science that have worked at tech companies across the world, and providing this sort of outsourced data science team to help those companies build their own data science strategy or build algorithms, kind of operating as that outsourced team for them, so they can get to another level, and working with other investors that can provide something additionally as well, whether that's engineering talent or customer acquisition expertise.
And Lexi, that's exactly what the hubs aren't doing yet, that we're trying to get them to do, are those outsourced services, the shared services that individual startups by themselves can get, but because they're aggregated at the hub level, they can tap into at low cost while they grow.
Absolutely, I love that.
When we're talking about this hubs debate, I think if memory serves correctly, there are about, I stand to be corrected, so if any of you guys have the up-to-date information, please let me know. But I think there are about 450 hubs.
618.
Yeah, 618.
618.
Yeah, and because I think that there was that jump from, I think it was the 450 to the over 600. That happened within a very short space of time. So when it comes to this issue, because I can imagine that the point that Alex is making is probably a type of frustration that a number of founders on the continent, not only in South Africa, are feeling. So are we here to be increasing the number of hubs, or are we here to increase the size and quality of what those hubs can actually do. Maybe.
That's exactly what I was just saying. We have
Yeah.
the numbers. What we're working on now is upgrading the capacity of those who are operating in hubs. They've exploded overnight. There aren't any standards, okay, of operation. There aren't any methods. I, for one, I have a personal framework I use for assessment that I'm trying to flog to them if they'll take it. But it just helps us understand progress, okay, of startups as they get along. There's a fundamental difference between pre-revenue and post-revenue startups, but you will take some bets on pre-revenue because that that team's going to deliver. And what you want to do when you're in my game is get in as early as possible, okay? But not just with cash, but providing services that support them. Now, if I've got places I can send them to make sure they don't have to worry about accounting, or I send them to and they know that their corporate governance is sorted out and they're not going to have to worry about legal, guess what? They can focus on getting the product to market, which is what they really want to do in the first place. Does that make sense?
I haven't heard from you in a little bit. We haven't heard from you. Your take on everything?
Sorry, was that for me?
Alex.
Yes.
Alex. Oh, Stéphanie Louise or Alex?
Stefan, yeah, it's Stefan.
Yeah,
sorry.
Stephanie, yeah.
Oh, no, I actually wanted to jump on your last question, but Tommy also said very clear things about it. But I think we need both. We need to, as we said earlier, it's still 54 countries in Africa, so 618 hubs. It's a good number, but if you think of like all the potential that has to be unlocked in like more rural areas and mid-sized cities, I think it's important to have this in mind. And the second aspect is, when it comes to shared services and having that sort of like commons approach of digital hubs and innovation hubs, I think it's important also to look at what is the skills framework required to succeed as a startup, either pre-revenue and post-revenue. And I think this is something everybody in the world is still looking at, like what do you need in terms of tech talent to be able to start up, and what do you need at tech talent to scale up? And I think, before joining the Digital Africa initiative, I was leading African development for an online school called Open Classrooms that had over 3 million students per month connected to the school for training to digital jobs, basically. And over 20% of this learning community is based in French-speaking Africa, Open Classroom being a French company. So I'm just mentioning that because across those 20% learners across the continent, you would find that they would look at more advanced online courses than in Europe or even in the US. Let's say that in Europe, the top 1 class online course would be HTML5 or PHP. And in some countries such as Ghana or Tunisia, it would be Python or Angular, which means that, the tech talent pool in Africa is huge and massive, and we need to really like tap into it. And this is, and the COVID pandemic is clearly an opportunity to connect all these dots, because yes, the operational landscapes is still a major struggle, whether it comes from like admin to logistics, but the truth is that with everything being frozen in terms of like activities in other parts of the world, because we know also that it's not exactly the same situation everywhere across the continent again. And, it's just like we need to connect all these dots, and that would be a major step for both the future of venture capital and the future of innovation.
When it comes to this, that aspect of connecting the dots and the hubs, there's also another piece that in Africa is quite big, and that's the role of corporate players, right? Because you can have a large corporate like Naspers, putting in a lot of money into startups, but that's literally their core business, finding, companies to invest in. But on the other side, you have, your banks, etc. And I can point to someone like, I think Rand Merchant and First Rand, they are quite active when it comes to, startups. Have been able to do quite some decent work in raising, startups on the continent, etc. But what happens where, corporates just throw a lot of money at this thing, right? I'm just thinking about what Alex was saying just now. You throw a lot of money, it becomes a tick box exercise. You say that you've done business development support. I think those are the terms that are used out there. How do you, make sure that, you are throwing money at it, because the money is necessary, but the mentorship and all of that stuff, how do you ensure that from a funding point of view, it doesn't just become a tick box exercise from one of the biggest stakeholders, in this whole, ecosystem that's there?
So I think that that's a very good question. I think corporate CVC globally has this problem. It's not just an Africa problem. A lot of tech companies would love to have the support of a large enterprise player because of mentorship, access to partnerships, and access to customers. But I think in reality, the incentives are not there across the corporation to actually make that happen. And although you see investment dollars going into some of these startups within these programs, there's not really the same access across the corporation that I think is what most of these tech companies would really go to these CVCs for. I think Tomi is probably the best one to jump in here and answer what we need to do to solve that. But yeah, I think we've seen very mixed performance from CVCs on the continent.
Tomi, you've been tasked to answer.
Well, there's a firm I work with called Hyber that is actually dedicated to solving this specific problem. So Charles Ojei and Ruisa Kabaka run Hyber. And what they do is they look at corporate strategy and target and identify startups and develop them over a 3 to 5 year period with a specific objective of acquisition. That's one approach. There are others, and they will continue to evolve. It's a very, very nascent market on the continent, and it's one I'm quite hopeful we're going to continue to see growth in.
I want to add something, if I may.
Sorry,
sorry.
Yes, definitely.
Yeah, regarding corporate innovation and corporate venture, also tapping in and supporting the growth of innovation ecosystems across Africa. I think there's something behind corporate, or just enabling big corporations to work around smaller players, and which we would call a couple of years ago open innovation kind of approach of designing product and supporting business development. And I think that behind that open innovation issue, or let's say a framework, there's an issue around access to data. And I mean, this is probably one of the key, and it is probably also a good area for blockchain to look at, like just in terms of like, how do you provide some consistent and compliant CGUs as a big corporate to let African startup to play with your data and innovate on this basis, and what should be the role of local government also to define what is what we could call some public data and what is considered as private data, and how can we work around that, and what are the business models for that. So I don't know if that where you wanted to take the discussion, but I think it's important to mention that, because for me it would be very much also an important and super important step for ecosystems. And at Digital Africa, being a nonprofit organization, what we looked at is creating some capacities to analyze with basic ML, machine learning, and data on startup, to be able to understand what kind of data do they need to feed their business model and feed their models and product in general, and then try to aggregate the open data existing on the market. So when you look at agriculture, for example, it's very clear, like what kind of data coming from satellite data, or the land registration data. How can you better provide access to smaller player to this kind of data and connect the dot again between what corporate has access to and what smaller players have?
Before we come to the end of the discussion, Alex, your take on this, corporates and their role in, helping the ecosystem?
Yeah, let me address the corporates thing and then jump in on the data point that was just made. So on corporates, I've been overall, I mean, there have been some exceptions, but I've been overall very disappointed by the follow through of corporates following startup competitions and engagements with startups. I also think that the size of startup competitions and these kinds of initiatives is way too small. Like if you scroll through Twitter and see startup competitions, like it's not even worth applying for many of them, given the amount of work required and the size of the prize. But on follow through, yeah, like it seems that there's a lot of internal politics that needs to be resolved to actually see these projects get delivered and rolled out within the organization. I think they're a good mechanism to do business development for startups because they can have conversations they otherwise wouldn't have access to, but there needs to be a lot more follow through within the organization to deploy the solutions in the real world. And then on the data question, I think, yeah, absolutely, companies need to open source a lot more data. I think one really interesting mechanism for this is data science competitions. So there's this platform called Kaggle. It basically created a repeatable process around this idea of the Netflix prize. In 2009, Netflix gave $1 million prize to the team that could improve their recommendation engine the most. And they essentially sort of like outsourced this data science work. And since then, this platform Kaggle that recently got acquired by Google enables any company to run a data science competition, and they publish data and people compete and win prizes. And then often there's partnerships with those people who submit the solutions later. And there's also some interesting stuff to do here using like homomorphic encryption to encrypt the data so that it's not a matter of like publicly releasing sensitive data, but sort of like you can fit a machine learning model on the encrypted data that works just as well on the unencrypted data. So I think there's some interesting models to explore. And really, I think corporates need to start exploring them and have better follow through.
All right. As we end off the discussion, just very briefly, I'll start with Tommy, your final thoughts on the discussion and your outlook for venture capital on the continent.
I think Tommy might have left. Oh, no, sorry.
I'd just like to say thank you very much. It's been a pleasure, and I wish you all a happy AfricArena. Thank you.
Lexi?
Yeah, I mean, my takeaway is don't let a good crisis go to waste. A lot of our companies are doing incredible things in this market and really, growing revenue despite everything that's happening in the world and on the continent.
Stefano Luis?
Yeah, I mean, it was a great conversation. Thank you, AfricArena's team, to put this together. As Lexi said, I mean, the COVID situation required new ways for venture capitalists to, approach the markets across the continent. And I think both from a financial product perspective and, just sharing and co-investing, sharing data and co-investing is probably what will be most important over the next couple of months. So yeah, I'm happy to continue that conversation around how do we improve co-investment opportunities and sharing data around investment opportunities across the continent.
Alex?
Yeah, thanks. Thanks for the panel. This is great. I think COVID and the current climate is either really good for you or really bad, depending on the business model and vertical that you're in. I think on the really good side, like you no longer have to travel to meetings and schlep around. People are awake to remote work, which is very attractive to startups because they don't need to buy an office and have all these unnecessary expenses. I also think that, yeah, I mean, again, don't let a crisis go to waste. I think a lot of really interesting businesses were built in the midst of crises, and it forces you to like really test assumptions. I also think now is the best time to start a startup. The costs of starting something are really, really low. A lot of what would otherwise be big companies and require large investments can be created in a weekend hackathon. And I would just encourage people to question this assumption that you need money at all, and that you could potentially bootstrap a business and not need to be pushed around by VCs as often happens. And yeah, like bootstrap your way to success, because often you don't actually need a lot of money to get something off the ground. And if you're thinking from that perspective, you'll often be a lot more creative and yeah, approach things with a different perspective.
Thank you so much to our amazing panel. Thank you so much for the discussion. Very enlightening. And as we were talking, we also heard that we are on track as a continent to exceed last year's venture capital amounts, the amount of investment coming onto the continent, and we hope to see that continuing into the future. Yes, there are a couple of headwinds that might hamper that, such as parts of Europe and the US going into a second round of lockdowns. But for the most part, it seems people are quite upbeat about what's going on the continent. And I think the efforts are going to be just around making sure that support for businesses increases, especially on the early stage side, and just making sure that we have enough mentorship to carry people to that growth phase of investment. Otherwise, I've been Mudiwa Gavaza of the Business Day and Financial Mail. Thank you so much. Enjoy the rest of AfricArena Summit.